Mark, we don't really see much of a reaction in the markets to the North Korean missile launch. The won slightly fell against the dollar. What do you make of the reaction, and how are risk appetites holding up in Asia after the event?
Well, I think risk appetites across the region and for investors coming into the region picked up around early September when we saw the announcement from the US for additional Fed easing. And then post-election, as we know, investors have become somewhat more cautious as they focused on the fiscal cliff in the US, the issues around that, and of course ongoing issues within the Eurozone. But there was a sense, I think, coming through December that we're going to see some expansion in risk appetite, particularly with a perceived improvement in the economy in China. This latest action out of North Korea does sort of test attitudes overall to security issues in the region. We've seen a stepping up of tension, as we know, China and Japan and disputed territories in the China Sea. And I think we've got to view this latest event in context of the overall security issues in the region. But I think investors at the moment are sort of holding fire and just continuing to focus on some of the broader macro issues, particularly with the Fed meeting in the United States.
How should we position ourselves ahead and after the Fed decision, considering that the fiscal cliff problem isn't going away?
Yeah, it's very interesting because in some ways the Fed are going to be providing some sort of a backstop as a safety net almost, in case the ongoing discussions regarding the avoidance of a fiscal cliff start to deteriorate. I think the current mood is, though, that we are edging closer towards a compromise that will be somewhat positive. And as we saw overnight, trading in the US market is sort of starting to discount a more optimistic outcome and starting to put the worst case scenario down to a low order of probability. So positioning, I think, is already taking place. Investors are being a little bit more positive, and we've seen a very good run now in Asian markets, and that's consistent with an improved outlook perhaps for the outcome of the discussion in the US, and also some improvement in fundamentals and macroeconomic factors, whether it's out of the US, Europe, or indeed China and other parts of Asia.
So how would you position in China then? What would you invest in and why?
Well, I think summarising the position in China is very much a short-term trading opportunity. I think the China bulls are very quick to seize on some evidence that the economy is past the worst. We seriously saw a slowdown in the third quarter, an extension of the ongoing slowdown. But since then, some data flows have suggested that China's economy is improving. And I think this is going to be talked up more and more. So short term, we're going to see that trading opportunity, and it's going to be the names that are more well known. Firstly, those that are broadly held, and secondly, it's going to be those companies expected to benefit from some of the policy initiatives that will be finally confirmed during the course of the MPC meeting in March, and that's really related to fiscal spending, infrastructure spending.